What if the most important financial story of our generation is happening right now, but it's not making the front page? What if a seismic shift is underway, deep inside the quiet vaults of the world's central banks, with profound implications for all of us? This isn't a story about day-to-day market noise. It's about a warning. For thousands of years, gold has been a constant, a silent judge of value. But today, it's sending a signal that is loud and clear. It no longer trusts the promises of governments. It no longer trusts their debt. We're here to break down that signal, to understand exactly why this is happening now and what it means when the ultimate form of money starts preparing for a crisis. Let's get into it.
So, we've broken this explainer down into 6 key parts. First, we'll cover the silent warning that gold is sending out. Then we have to look at the scale of the debt, which is really the root cause of all this. From there, we'll explore how that debt leads to the erosion of trust in currency itself. Then we'll look back at echoes of history to see how this has played out before. Next, we'll uncover the institutional pivot, what the smart money is doing right now. And finally, we'll define the final signal and what it all means.
All right, let's start with the warning itself. Something huge is happening, but it's happening without the usual blaring headlines. In the last couple of years, central banks have bought historic amounts of gold, more than we've seen in over half a century. But you probably didn't hear much about it. See, this movement isn't about the usual panic-driven spikes you see on the news. This is something much deeper, far more calculated, and frankly, a lot more important. It's a quiet, methodical repositioning by the world's most powerful financial institutions. They see a fundamental flaw in the system reaching a breaking point, and their actions are the only headline that really matters.
Now this is the part you absolutely have to understand. Gold is rising, but it's the reason that's critical. This isn't being driven by the public chasing a hot trend. No, this is a strategic accumulation by the most sophisticated players in the game, central banks and massive institutional funds. They are not reacting to market noise. They're executing a well-thought-out, long-term strategy. They are responding to a deep, structural problem that they see coming over the horizon. It's a quiet but massive shift happening just beneath the surface of the mainstream financial news. They're getting ready for a future that looks very, very different from the present.
And this quote right here just nails the core idea. Gold's real power isn't in reacting to what's happening today, but in predicting what's coming tomorrow. It doesn't care about this month's inflation report or last week's jobs numbers. It's pricing in the long-term integrity of the entire financial system. Specifically, it's looking at the ability of governments to actually pay back what they owe, their debt obligations. And right now, its movement is screaming a deep and growing doubt about those promises. It's a vote of no confidence, not in the present, but in the future.
So here's the bottom line. We're being given an early warning. It's not a loud siren, but a quiet, relentless hum of accumulation in the background. The question you have to ask yourself is this: can you really afford to ignore it? This isn't just another market cycle. It could very well be the most significant macroeconomic development of our lifetime. Ignoring this signal now could mean being caught completely flat-footed when the rest of the world is finally forced to wake up and react. And trust me, by then, it will be far, far too late.
Okay, so what is this deep structural threat that's got the world's most powerful institutions so concerned? It all boils down to a single 4-letter word: debt. This is the root cause, the underlying disease that's forcing gold to behave the way it is. We are talking about numbers so massive they almost become meaningless, but it's absolutely critical that we understand their weight and what they mean for the entire global financial order. You have to understand, this isn't just some accounting issue. This is a story about a system being pushed to its breaking point, a system built on promises that may no longer be possible to keep. The numbers aren't just statistics, they're the sound of a clock ticking.
Just try to wrap your head around this number. Over $35 trillion. That's the national debt of the United States alone. And it's not just big, it's accelerating. It's now growing by about $1 trillion every 100 days. Think about that. To put it in perspective, that's more than $100,000 for every single person in the country. It's over 120% of the nation's entire annual economic output. This isn't just a number on a screen. It represents a massive, legally binding claim on all future work, all future innovation, and all future taxes. And it's expanding at an exponential rate. The sheer scale of this is unprecedented in peace.
And let's be clear, this is not just an American problem. This is a global pandemic of debt. Across Europe, in Japan, all throughout the emerging markets, government debt is at or near the highest level since the end of World War II. Now, for the last decade or so, central banks kept interest rates near zero, which made all this borrowing feel painless. But that party is over. And here's where it gets really dangerous: the feedback loop.
Governments are now having to borrow new money just to pay the interest on their old money. It's like using one credit card to pay off another. This creates a debt spiral that becomes mathematically harder and harder to escape every single day. It's a trap, and there's no obvious way out.
So what's the official response to this? Central banks step in with policies like quantitative easing, a fancy term for creating money out of thin air to buy government bonds. Now, these actions are designed to keep the system afloat in the short term, to manage today's problems, but they have a corrosive, long-term effect. They systematically destroy the long-term value of the very currency they're supposed to protect. It's the ultimate paradox. The tools being used to create stability are the very same tools that are eroding the foundation of trust. It's like trying to fix a leak in the roof by flooding the basement.
And this brings us to a really crucial point. When you see reports of China or Poland or India buying tons of physical gold, they are not speculating. They are not trying to get rich quick. They are buying insurance. They're acquiring a timeless, stateless monetary asset that has zero counterparty risk. It's a hedge against the growing strain inside the very system of government debt and paper currency that they themselves manage. It's a defensive move, plain and simple. And it should tell you everything you need to know about what they really think is coming.
So if you take one thing away from this section, let it be this. Stop thinking of this mountain of debt as some boring accounting problem. It's not. It is a live stress test being applied to the entire global financial system. Every new $1 trillion of debt just adds more weight, more pressure, and more fragility. And in this global stress test, gold has one vital role. It's the thermometer. Its price rising doesn't cause the problem. It simply and accurately measures the rising temperature of systemic risk. And right now, that thermometer is telling us the system has a dangerously high fever.
Okay, so we've established this mind-boggling scale of debt. But why does that matter? What does it actually do? Well, it gets at something far more important than numbers on a spreadsheet. It eats away at trust. And that brings us to our second section. Why massive government borrowing always, eventually, destroys faith in a nation's currency. The answer gets to the very heart of what money is and what gold represents. This isn't some newfangled theory. It's a pattern that has repeated itself over and over again throughout history. When promises get too big to keep, trust disappears. And in the world of money, trust is the only thing that really matters.
This table really breaks it down perfectly. On one side, you've got our modern paper currency. What is it really? At its core, it's a liability. It's a promise from a government, and it's backed only by your trust in that government's ability to manage its finances. And here's the kicker. It can be created in literally infinite amounts with a few clicks on a keyboard. Now look at the other side, gold. It's a physical asset. It's not someone else's promise. Its value is backed by 5,000 years of human history, not a government that's only a few centuries old. And most importantly, you can't just print more of it. It's finite. It's scarce. So when government promises start to look shaky because of all that debt, where do you think the smart money goes?
And this loss of confidence doesn't just happen overnight. It's a process, a slow burn. And this is the sequence it almost always follows. First, the debt just keeps rising to levels that are obviously unsustainable. Second, you start to see subtle shifts in policy that signal, hey, maybe paying all this back in real terms isn't the plan anymore. Third, and this is the key stage we're in now, the institutional players, the central banks, they quietly detect this weakness long before anyone else. Fourth, gold starts to move. It begins its steady, systematic climb, acting as the ultimate early warning system. And that final stage, widespread public panic, that comes much, much later, long after the chance to prepare has already gone.
So what's really happening here is a difference in vision. You know, most of the market is focused on the short term. They're looking at quarterly earnings, daily headlines, and what the talking heads on TV are saying. They're focused on the noise. Gold is different. It doesn't listen to the commentary, it just looks at the balance sheet. It sees the underlying creditworthiness of the entire system. It's not pricing in next week's news. It's evaluating the risk of the next decade. And because it sees the storm forming way out on the horizon, it doesn't wait around, it acts early.
And this brings us to the most urgent point of this entire explainer. The signal isn't coming. The signal is here, right now. The quiet, methodical rise of gold is the signal. It's the canary in the coal mine singing its warning. If you wait for the crisis to be announced on the news, if you wait for it to become the #1 headline that everyone is panicking about, you're no longer preparing. You're just reacting. And those who wait for that obvious, widespread fear to finally confirm what's happening will realize they were the last ones to the party. They will have completely missed the advance warning that gold is giving us today.
So you might be thinking, okay, this sounds serious, but is this time really different? Well, it's a great question, and it leads us right into our third section. Because this situation is not happening in a vacuum. History gives us a very clear roadmap.
There have been other moments when unsustainable debt pushed a financial system to the brink. And in each of those cases, gold sent out a clear warning signal well before everything hit the fan. Understanding these past events is absolutely crucial to grasping the gravity of today's signal. You know the old saying, history doesn't repeat, but it often rhymes. Well, the rhyme we're hearing today is getting awfully loud.
Let's look at two perfect examples. First, 1971. The U.S. was drowning in debt from funding the Vietnam War and massive social spending at home. Other countries started losing faith in the U.S. dollar and began demanding gold in exchange for their dollars, as they were promised. Well, before President Nixon went on TV and officially closed the gold window, the price of gold in the open market was already surging. It was signaling that the system was broken before the politicians admitted it. Now, fast forward to the years leading up to 2008. The mainstream narrative was all about the Great Moderation, the idea that economic booms and busts were a thing of the past. But while everyone was celebrating the housing bubble, gold had been in a powerful bull market since the early 2000s. It was quietly screaming that there was a deep structural fragility and a dangerous amount of debt building up in the banking system. It warned us for years before Lehman Brothers collapsed.
Now, what's so powerful about these historical examples is that they show a consistent, repeatable pattern. It's a four-step sequence. First, the stress from all the debt builds up quietly in the background. Second, trust in the official system begins to erode among the people who are paying closest attention. Third, and this is the key, gold moves first. Its price begins to climb before the general public has any idea that something is wrong. And fourth, the most informed players, the central banks and big institutions, they act on that signal, while everyone else is still distracted by the noise. This pattern is the playbook, and it's playing out right now.
So the takeaway here is that history isn't just something you read about in a book. It's a live instruction manual for the present. What we're seeing in the gold market today is not some strange new event. It's the modern version of a historical warning system activating once again. To watch the methodical buying of gold by central banks and to see its price climb steadily against this backdrop of record-breaking government debt is to witness that warning signal in real time. It is a chance to understand a profound systemic shift before it explodes into the mainstream and forces everyone else to react in a panic. History is giving us a preview of the future. The only question is whether we're going to pay attention this time.
This leads us perfectly into Section 4, the institutional pivot. Okay, so if gold is the signal, who's actually listening? The answer is simple: the smart money. We're talking about the world's central banks and the largest financial institutions. For a moment, we need to completely ignore the public commentary and the political speeches and instead focus on what these massive players are doing. Because their actions right now tell one of the most significant and underreported stories of modern finance. It's a clear vote of no confidence in the sustainability of the current debt-based system. And they are moving with a quiet urgency that should get everyone's attention. Let's follow the money.
Now, the thing about this slide is that the data is just undeniable. This isn't a theory or an opinion, it is a hard fact. For the last several years, central banks around the world have been buying physical gold at a pace we haven't seen in over 50 years, not since right before the last gold-backed system collapsed in 1971. Just look at this chart. The buying in the last few years isn't just a small uptick. It represents a complete paradigm shift. It is a rate of accumulation not seen in our lifetimes. And sure, you see China and Russia on there, but look at the other nations category. This isn't just one or two countries. This is a broad-based global trend away from the US dollar and toward a hard asset with zero counterparty risk.
Let's be really specific about why they're buying. This isn't a speculative gamble. It's a coordinated strategic pivot. For nations like China and Russia, it's about de-dollarization and insulating themselves from financial sanctions. For a country like Poland, sitting on the front lines of geopolitical tension in Europe, they explicitly state that they are buying gold for national security. And for rising economic powers like India and Turkey, it's about diversifying away from a system they see as increasingly fragile and dominated by the West. Each country has its own specific reason, but they all lead to the exact same action: systematically trading their holdings of government debt, which are just promises, for physical gold held in their own vaults.
And this brings us to what I call the great disconnect. Here's an analogy. Imagine you hear a faint fire alarm in a huge office building. The average person looks around, they don't see any smoke, they check their phone, and they hear an announcement over the intercom saying everything is fine. That's the retail investor. But the building's architect, the institutional player, they know where all the faulty wiring is. They don't wait to see smoke. They hear that alarm and they immediately and quietly head for the nearest exit. That's the great disconnect. The public is focused on the noise, the headlines, and the official reassurances. The insiders are focused on the signal, the alarm itself.
So the takeaway here is simple but powerful. Actions speak much, much louder than words. If you want a raw, unfiltered assessment of the health of the global financial system,
Stop listening to the press conferences and start watching where the physical gold is flowing. The central bankers and institutional managers who really understand systemic risk are not going to go on TV and sound the alarm. They are quietly and professionally taking action to protect their balance sheets and their countries. They are not talking, they are accumulating. And that action is the clearest, most honest signal you will ever get. They are preparing for a storm.
And that brings us to our final section. It's time to put all the pieces together and define what this really means for the world today. Because gold's role in the 21st century financial system has changed. It's no longer just some shiny rock or a simple hedge against inflation. It's evolved. It now serves as a direct, real-time indicator of the entire system's fundamental health. It has become the ultimate judge of trust in a world that is literally drowning in promises. So let's define this final signal and what it means for the future of money itself.
This definition right here is key. I want you to stop thinking of gold as just another commodity to trade. Think of it as a gauge on the dashboard of the global financial system, a system-level stress indicator. Every significant price movement, every ton of gold that gets moved into a central bank vault is a direct reflection of the world's collective trust or lack of trust in the promises made by governments. When those promises, in the form of trillions of dollars of debt, become strained, the value of a trust-independent asset like gold naturally rises. It's the market's purest verdict on the creditworthiness of the entire system.
This table simplifies the entire situation down to its bare essentials. On one side, you have the world's governments. Their action? They're borrowing money at a record accelerating pace. The result? Confidence in their long-term stability is fragile, at best. On the other side, you have the world's central banks. Their action? They are buying hard assets, physical gold. The result? It signals their own confidence in the paper system is declining. These two actions are in direct conflict with each other. It's a system at war with itself, creating deep cracks in the very foundation of our monetary order.
Now, let me be absolutely clear about one thing. The point of this entire explainer is not to give you a price prediction. This isn't about telling you where the price of gold will be next week or next year. It's about something far more important than that. It is about understanding a deep structural shift in the global financial system before it becomes obvious to everyone. It's about recognizing the warning signs and understanding the massive move away from debt-based promises and toward tangible assets, a move being led by the world's smartest money. This is about comprehension, not speculation.
And so we'll end on this thought. The financial system rarely shouts when it's in trouble. It whispers. Right now, gold is that whisper. It's a quiet but persistent signal about debt, about trust, and about the very nature of money changing before our eyes. Those who choose to listen now, to understand the message behind the institutional buying and the steady price rise, will be armed with knowledge. They will grasp the true magnitude of this change long before it erupts into the mainstream headlines and forces a panicked reaction from everyone else. The warning has been sent. The choice to listen is yours.